Hi, this is Nashimar, the CEO of InfoTaxSquare.com and the GLIME-led professor. I encourage students and professionals to sign up with GLIME to enhance their knowledge. I also request those who watch our videos to subscribe with our channel so that they can receive the most up-to-date taxation information in their email. Why should you subscribe with our channel? Because we are the team of EAs and CPAs, and we develop content based on Congress-issued IRC codes and the IRS publications. My today's topic is about the tax deduction on itemized deduction as an itemized deduction on Schedule A below the lines. I'm going to explain it with an example. Sam and Ann Jefferson filed a joint federal income tax return for the calendar year 2024. Among their cash expenditure during 2024 were the following. How much they paid? They paid for $3,000 real estate taxes on residence, $400 state and city sales taxes, $900 state income tax. What is the maximum deduction for taxes on Jeffersons 2024 return? So they have given us 4 choices. Choice A $4,300, choice B $3,900, choice C $3,400, choice D $3,000. So before going to calculate how much they are eligible to claim, let's just find out what is actually IRS. What does IRS allow us to claim as an itemized deduction on Schedule on Part 2 as an itemized deduction? So state and local, so which taxes are deductible to determine the amount you can claim as an itemized deduction. State and local real estate and personal property taxes are deductible, state income taxes are deductible, and state and local sales tax can all be deductible. Whatever it is given in the example, those are all deductible. But there are some limitations and there are some restrictions. So we'll just find out according to this example, according to the information. The deductions are helpful in lowering tax income by deducting allowable expenses from adjusted gross income, which makes itemizing beneficial when they exceed the standard deduction. So let me just repeat again, because it's a very important paragraph. Which taxes are deductible to determine the amount you can claim as an itemized deduction? This is very good. This is very important for the student, those who are planning to participate for CPA and E exams. State and local real estate and personal property taxes are deductible, state income taxes are deductible, and state and local sales tax can all be deducted, but they must be itemized and reported in Schedule A rather than being deducted for AGI or also called it stands for adjusted gross income. The deductions are helpful in lowering taxable income by deducting allowable expenses from the adjusted gross income AGI, which makes itemizing beneficial when they exceed the standard deduction. Basically, the whole idea is for the itemization, whether you take the actual expenses or whatever the IRS has allowed you. Between two, standard deduction and itemized deduction, whichever is higher, you can claim. And now let's see state income taxes versus sales taxes, because both are part of the itemization, but which can be claimed. To obtain the biggest tax break, taxpayer must decide whether to deduct state income tax or state and local sales taxes. Basically, between these two, the taxpayer has to decide whichever is higher can be claimed. By choosing this selection, they can maximize their itemized deduction on Schedule A and improve their tax situation, maintaining a balance between higher deduction and low taxes. So now we know, we have the question, we know the choices, 4 choices we have gone through with the limitations, restrictions, and whatever we can claim based on the IRS. Now let's determine how much Jefferson's family can claim the taxes. So Jefferson can claim $3,900, which is a combination of $3,000 real estate taxes and $900 state income tax. We are going to eliminate $400 because $900 is higher than $300. That is the reason we are choosing state income tax. So $3,000 plus $900. The correct answer is B, which is $3,900. It is common for state income taxes to offer a greater deduction than state and local sales taxes. By choosing to deduct a higher amount, taxpayers can increase the amount of their itemized deduction on Schedule A, which may result in a better tax position. Where do you have to report the $3,900 taxes you paid are reported in Schedule A, Part 2, between line 5 to line 7. I thank you so much and God bless you.